Hello traders, you're welcome to this video and you are welcome back to the Forex Geek channel. Okay, in this channel we break down the best strategies to level up your Forex trading game, and in this particular video we are going to be diving into a powerful tool that you need in your trading arsenal, and that is going to be the Fibonacci breakout strategy. Trust me, this one can transform the way you spot potential trades. However, it's important for me to mention that this strategy does not guarantee profits. In as much as it's effective, it does not guarantee profits. All right, there is no strategy that is foolproof. Okay, every strategy carries risk. All right, so if you are ready to sharpen your skills, hit that like button and make sure to subscribe so you don't miss more tips like this one. All right, now let us talk about the Fibonacci retracement tool. Okay, you've probably heard of it. It's a favorite among traders because it's all about identifying key levels in the market. Okay, so I'm just going to be drawing the Fibonacci retracement tool first. Okay, this is the Fibonacci retracement tool, right? Now, in this video, we are just going to be taking this tool one step further and combining it with breakout trading. Now, this combo helps pinpoint moments when the price is likely to break through a level and continue moving in the same direction. All right, so Fibonacci levels are based on ratios derived from the Fibonacci sequence, like the 23.6%, 38.2%, 50%, 61.8%, and so on. Now, these act as psychological levels where the price might retrace or bounce. When we use these levels to spot breakouts, it gives us a structured way to trade trends more confidently. Okay, so step one is identifying the trend. Is the market going up or down? In this situation, we can see that the market was clearly going up, right, in this situation. Okay, then after you have identified the trend, you draw your Fibonacci retracement tool from the swing high to the swing low for a downtrend, or from a swing low to a swing high for an uptrend. So like I did here, this is a swing low to a swing high for an uptrend. All right, once you have marked these levels, pay attention to the price action, right? Pay attention. Now, for example, the 61.8% level, right, is also known as the golden ratio. The reason why it is known as the golden ratio is because it is one of the most critical points. When the price approaches this level, watch closely for a potential breakout. All right, watch closely for potential breakout. We are not just guessing here, right? We need confirmation. Okay, now confirmation is key. Confirmation is key. So you might want to add on other indicators like the RSI or the moving average. I'm just going to be adding both of them. All right, I'm going to be adding both the moving average and the RSI to the chart just for extra confirmations. Okay, now if the RSI shows overbought or oversold conditions, in this case overbought, since this is a sell breakout, so you have the RSI showing overbought condition near a Fibonacci level, or if the price breaks below the moving average, because this is a sell example, right, then that is your green light to plan your entry. So here's what a breakout looks like. You have a strong candle breaking through the Fibonacci level with increased volume. So you can see that we had a breakout around here. This trend line, first of all, was what gave us the signal of the breakout, because the price broke below the trend line and we even had a retest of the trend line. So this was our first indication of a breakout. And then we can see that the Fibonacci level, the 38.2% Fibonacci level, which was the level that the previous low bounced off from, was broken. We can see that it was broken, and you can see how long this candle was. So this was a second breakout confirmation. The first confirmation was from the trend line. The second was from this Fibonacci level, the 38.2%. And the third is from the moving average, which we are using as a confirmation indicator. And then finally, we can see that the RSI is trending downward. You can see how strong this downward slope is. So this was another confirmation of this breakout. All right, so we would have considered entering a sell somewhere around here below the 50% or below the 38 point. Okay, let's just use the 50%. All right, below the 50% because it was the 38.2% that was broken out from. Okay, the breakout occurred at the 38.2%, so we can enter at the 50%. All right, just to confirm that the breakout was valid. And then by then the price has already dropped below the moving average, so we have entered the sell here. We can set our stop loss above the moving average, which is going to be above the breakout point. Or if we want a wider stop loss, because this is going to be a tight stop loss, right? You can just set a stop loss above the breakout level. You can try to set it above the previous swing high, okay? But in order for you to have a good risk to reward ratio, above the breakout level will be a good place, right? And then for your take profit, you can use the 100% Fibonacci retracement zone, right? The 100% zone can be good for your take profit, okay? All right, so that is it. Now, of course, it's important for you to know that no strategy is complete without risk management. All right, so always use stop loss orders. A good rule of thumb is to place your stop loss just below the breakout level for buys or above the breakout level for sells. This minimizes risk in case the breakout fails. All right, now what is great about the Fibonacci breakout strategy is how well it works with other tools. For instance, if you are already using support and resistance or trend lines, you can combine those with Fibonacci levels for even stronger trade setups. So think of it as stacking probabilities in your favor. All right, so now let us recap. First of all, use Fibonacci retracement to identify key levels. Okay, use it to identify key levels. Secondly, watch for confirmation with indicators or price action. All right, you can use the moving average or the RSI or even add both of them in addition to your trend lines. All right, please make use of all of them. And then watch out for candlestick patterns. Okay, watch out for candlestick patterns, because those are also going to give you extra layer of confidence when executing your trades. Okay, and then thirdly, enter at the breakouts. Right after you have a breakout and you've gotten your confirmations, enter and manage your risk with stop losses. Okay, and then finally, combine this with other strategies for even better results. So in as much as this strategy is effective, you can just use it as an additional strategy, to your trading toolkit. All right, so if you are ready to start practicing this strategy, kindly let me know in the comments section. Okay, have you used Fibonacci levels before, or is this your first time trying a breakout approach? Drop your thoughts below. I would love to hear from you. Okay, and before you go, don't forget to like this video if you found it helpful, and subscribe to this channel for more trading strategies and tips every day. Okay, you wouldn't want to miss out on the many more insightful videos that I have to share with you. So let us keep growing together. Until next time, stay smart and stay profitable. I wish you a very happy trading, and I hope to see you in the next video.